This is Mike Lingle from Rocket Proforma, and today we're asking the question, what are security tokens? And I'm going to explain it to you quickly. This is a presentation I gave for Founder Institute, where I'm a mentor. I'm also the founder of Rocket Proforma, where startups can quickly create their financial projections, and an advisor to the Security Token Group. And the rules for this, let's keep it civil. We're talking about cryptocurrencies and Bitcoin. People get very passionate. I'm merely presenting an opportunity here. Nothing presented here represents a recommendation regarding any specific investment or whether to invest at all. Because we're talking about security tokens, we're regulated now. All right, so what is a cryptocurrency? Cryptocurrencies run on blockchains. They provide a public ledger, and they allow trustless transactions. All very cool innovations. And they don't represent an underlying asset, which is what drives Wall Street a little bit nuts, is they're not used to this type of asset. And some cryptocurrencies are intentionally trying to live outside of our financial system. That's been the vibe since the beginning with Bitcoin, was our financial system is broken, is what they're saying. And so Bitcoin lives outside of the financial system. And people push the limits, right? So Ripple, for example, was sued by the SEC for acting like a security. These crypto lending firms are being shut down. BlockFi, for example, is being told they can't do the crypto lending product. So there's a lot of back and forth with the SEC about what's legal. Owning Bitcoin doesn't represent ownership of the Bitcoin company. So Bitcoin has value, but there's no underlying asset, and we'll talk about that more in a second. Owning Ethereum also doesn't represent ownership of the Ethereum company, but the token does give you access to smart contracts, NFTs, and DeFi, right? You can do some very cool stuff with Ethereum and now some of the other blockchains like Solana. Chainlink, an altcoin, doesn't represent ownership of the Chainlink company, even if you're holding the token. If you own Apple stock, that does represent a piece of ownership of the Apple company. So it's different. And the ownership of the Apple company is the underlying asset, sometimes called the underlying. So a share of stock is a security. It is a legal contract. Bitcoins, so that's a little bit different than what we're seeing with crypto. But what they all have in common, Bitcoin, Chainlink tokens, and shares of stock are all fungible. So my single Bitcoin has the same value as your single Bitcoin. We could exchange them and each have the same value. My share of Apple stock has the same value as your share of Apple stock. So even though Apple has an underlying asset, we can exchange shares of stock and they're the same. So now, what are NFTs, right? So shares of Apple and Bitcoin are all fungible. NFTs are non-fungible tokens. So what non-fungible tokens are, each NFT points to a different underlying asset, right? And what we're seeing in the art world is these NFTs point to pictures or videos or something, some piece of art, right? But NFTs can point to anything. And here's an example on the Solana blockchain of different NFTs. Each of these represents a different NFT and has a different owner. And NFTs are like very basic securities with only one owner, right? And people are already pushing the limits, going beyond ownership into cash flows. So Dave is a show on Hulu. It's the main character is a rapper, and he actually records tracks and releases them on YouTube. Those tracks have cash flows, and he launched an NFT that includes the publishing royalties to one of his tracks for the future, right? Which is a little bit different than just owning art. Now we're talking about cash flows. And it starts to feel like a security. One of the tests is whether someone else's work increases the value. So in this case, whoever owns the NFT, Dave's work is increasing the value of their NFT. So it feels a little bit like a security. There are NFT platforms launching. Everyone's trying to get into the NFT space. And so on October 13th, Coinbase and FTX US announced NFT platforms. And a few days later, on October 15th, a bunch of the Solana NFT projects cancel holder royalties. So these are similar to what Lil Dicky Dave was trying to do. But these were actually anyone holding the NFTs would get transaction fees anytime an NFT changed hands. So it's kind of like if you bought a house in a neighborhood, and anytime one of your neighbors sold their house, everyone in the neighborhood got a piece of the deal. That's essentially what these NFTs were trying to set up. And that is definitely a security. So FTX is telling these projects that they can't do that, right? But people are pushing the limits, right? That's exactly what people want to do. So now let's talk about security tokens, right? We understand cryptocurrencies, we understand NFTs. What's a security token? So it's like an NFT on steroids, right? It allows us to do the things with multiple owners or distributions from cash flows. It's actually a digital security. So it's like a share of stock, it's an investment contract, and it does point to an underlying asset. That's the cool thing about security tokens. And essentially what we're doing is flipping the script here. Remember, crypto was founded on existing outside of the monetary system. But what if we use the blockchain in compliance with regulations, right? So now we have this third ledger, the public ledger. Now we have trustless transactions, but we're following the regulations. And this is the innovation here. And obviously not everyone in crypto wants to do this, but this also creates an amazing opportunity, right? And this is what security tokens are. They are compliant with regulations, and they unlock a bigger potential market than crypto. And they work like stocks, right? So you can hold them and you can trade them. They standardize ownership of different asset classes. So a security token can represent a stock, it can represent a bond, it can represent a cash flow, it can represent the title to some real estate or some art, right? All these different asset classes we can tokenize and hold all in one wallet. Also, the cool thing about security tokens is they protect against loss because we have a digital cap table. Unlike in crypto, we know who's holding the token, and if something gets hacked or stolen, we can simply reissue the token to the person on the cap table. So we do away with a lot of the threat of lost wallets or hacked wallets. And security tokens also let us build cool new stuff, right? Like any technology, the first thing we do is replicate what we already have, which, shares of stock, bonds, whatever. But we also can create cool new stuff, like some of the DeFi stuff that's pushing the limits of what we can do outside of regulations. We can actually start to build some cool new stuff inside the regulations. So let's just review. With crypto, there is no underlying asset. There is value, but there is no underlying asset. With NFTs, the underlying asset is image or video or a title to actual art. Like Damien Hirst is doing a really cool project called The Currency, where you get an NFT that points to actual art. And you have to choose within a year whether to keep the NFT or take the art, the physical art, and the corresponding member of the pair is destroyed. So if you keep the NFT, the corresponding artwork will be destroyed in a year. If you accept the artwork, the NFT is destroyed. So it's an interesting experiment to see what people will do. With security tokens, we can have all kinds of different underlyings, but the core of the security token is there's something underlying the asset, a stock, a bond, a cash flow, real estate, titles, art, cars, whatever. There's an underlying asset always with security tokens, just like with NFTs. And you can think of security tokens as NFTs on steroids. They allow more features than just a single NFT. So there are three stakeholders with security tokens. There are issuers, there are investors, and there are regulators. So let's talk about each one. Why do issuers love security tokens? So the number one question from private investors is how can we sell our shares early? So issuers, this makes it easier for issuers to raise money, right? And we see this in crowdfunding, right? Right now, without tokens, if I invest in a crowdfund, I can't sell my shares for 5 years until that company gets acquired or goes public, right? And for me as a retail investor, maybe I don't want my money locked up in a crowdfund for 5 years. So if I tokenize, I can sell earlier. We're also seeing this in real estate, and real estate is a great early use case where private investors in the real estate deal are able to tokenize and sell their shares early. And that also opens up the opportunity to other investors, secondary investors, to come into deals they might not otherwise see. And we'll talk about that in a second. Also with issuers, AMC a few months ago said they wanted to give their shareholders, their stockholders, free popcorn. The thing is, stocks are not digitized. And we don't think about this because we're trading on Robinhood and it feels digitized to us. But in reality, AMC has no idea who their shareholders are. So if you come to their website to get the free popcorn, you have to self-attest. You have to let AMC know because AMC doesn't know who their shareholders are. Stocks are not digitized, and we don't really realize that, and that's part of the opportunity of security tokens is we can now open up Wall Street, right? We can take these public markets and digitize them. All right, so that's issuers. Why do investors love security tokens? Well, one is they provide that early liquidity, right? We just talked about that from the issuer side. And they give us investors access to formerly private deals, right? So I can get into, these are security tokens that are trading on T0. T0 trades these digital securities. ASPD is Aspen Coin. So those are hotels, right? It's a real estate property that I wouldn't otherwise have access to. Exodus is a crypto wallet. OSTKO are shares of Overstock, which also trade on public markets. And T0 is the token of the T0 exchange, right? None of these are things, except for Overstock, are things that I can trade on public markets. Similarly, SecuriTize just launched SecuriTize Markets. These all, 22X, Blockchain Capital, Science, and Spice VC, are all shares of funds that hold startups, which they're essentially venture capital funds that, again, we would never normally have access to. These are formerly private deals that we can now trade, right? And again, nothing, because we're dealing with securities, nothing presented here represents a recommendation regarding any specific investment or whether to invest at all. So we start having to follow the rules when we talk about security tokens. All right, so the third group is regulators, right? And the crypto ethos is to work around the regulators, but here we're flipping the script and we're going to be friends with the regulators. So why do the regulators love security tokens? First of all, there is a public record of all the trades. So what we see on the NFT marketplaces is essentially the equivalent of a Carfax, where for every one of these, we can see all the trades, who bought it, who sold it. That's very cool because everything is auditable easily. Also, the public can audit the blockchain. So it makes it easier to find people who are breaking the rules. So OpenSea trades NFTs, and the public figured out that one of their employees was front running the trade. So some of the NFTs get listed on the front page, that boosts their value. This person was purchasing those NFTs in advance. It would get listed on the front page. This person would flip the NFTs. And again, the public figured it out, right? So this is great for regulators because now the public can do some of their job for them, and it's easier to track and audit things that are happening. Again, this is not standard crypto stuff. We are flipping the script as part of this security token opportunity. And we're in the very early stages of this. People are just figuring it out. The market cap is super small in the security token world, but there is a big opportunity here. So let's talk about cryptocurrencies. As of this recording are about 2.6 trillion, sort of end of October 2021. NFTs are about 30 billion, and they've increased in value very rapidly. Security tokens right now are about a $1 billion market cap, a little bit more, which is not very big, right? And that's why people haven't really started paying attention yet. And security token market, stomarket.com, lists the trading security tokens on the different exchanges. So you'll see on the right-hand side here, the different exchanges. Here are the different tokens. So you can always go to stomarket.com to see what's happening. You can see the total market cap is just over $1 billion. But what's really cool here, right? If we look at the potential security token market cap, the private markets are much bigger than the public markets. The private markets are in blue here, the public markets are in gray. And you can see across equity, debt, and real estate, there's over $500 trillion of potential security token market cap here, right? And we're not even kidding. I work with a lot of startups, and I rarely see credible promises of $500 trillion market caps. But that's what we're looking at here, certainly in the public markets, but also definitely in the private markets, right? And so, and if we look at the private markets, private equity asset value has grown 4 times faster than public equity market capitalization over the past 2 decades. So if we want to play in the public markets, we need licensed finance professionals. If we want to play in the private markets, we still need to follow the rules, but as startups, we have a lot more leeway. We can still operate within the regulations, and work with licensed finance professionals, but we can do some pretty cool stuff with security tokens. So there's an amazing opportunity here. So what can we do with security tokens? One thing we can do is fix crowdfunding, right? Because there is not this early liquidity unless you tokenize. it keeps retail investors out because they don't want to be locked up in these trades for years. So we can start to tokenize crowdfunding earlier, provide liquidity, and offer that early liquidity to investors. And that early liquidity is huge, right? That's why we're seeing the crowdfunding use cases. That's why we're seeing the real estate use cases. Formerly illiquid trades are starting to have some liquidity. We can also democratize opportunities, so secondary investors can come in and get into these real estate deals, these VC fund deals that they wouldn't normally see. A lot of companies are also building portals, right? So if I can tokenize once, and I'll show you a case study in a second, I can tokenize things again and again and again, and we can build some very cool new businesses. We can also create new financial products with security tokens. We can take all the cool stuff that's happening in DeFi and do it within the regulations, which are great opportunities. So how do we create security tokens, right? It's sort of an intersection of law, finance, and tech. So we're going to need lawyers, we're going to need finance professionals, we're going to need technology. So some of this is easy, right? If you're crowdfunding and you're a startup, it's pretty straightforward. All of this is provided for you by the crowdfunding platforms. If you're creating a portal, you kind of have to figure it out yourself. And technically, the way we create security tokens, we create a corporate or LLC entity. We put assets into the entity. We tokenize the entity. And then we create and manage a digital cap table, wait potentially for a lockup period, and then list the tokens, right? And if we're waiting for the lockup period, this tokenization may happen later in the life cycle, but those are basically the steps. And we create these things, we can register with the SEC is one way to do it. There are also exemptions like Regulation Crowdfunding, Regulation CF, and Regulation Reg A Plus, that allow us some combination of US versus international investors, accredited versus retail investors. If you're in another jurisdiction outside of the US, you may have other rules you're following, but if you're trying to take on US investors, you will need to follow SEC regulations. All right, and so where do we trade security tokens, right? And I guess I want to start with where we trade stocks, right? We trade stocks on licensed securities exchanges, like the New York Stock Exchange or NASDAQ in the US. For crypto and NFTs, we have platforms like Coinbase, FTX, Binance, OpenSea. These are not actually licensed exchanges, right? They are not securities exchanges. They have no securities license. And they're actually prohibited from trading securities. For security tokens, we're talking about alternative trading systems or sometimes licensed securities exchanges that are licensed to trade digital securities. And these are places like T0, SecuriTize, Merge, based in the Seychelles, depending on whether you're in the US or international. But essentially, we have a third animal that's not stock exchanges and is not crypto or NFT trading platforms. That's where security tokens trade. So let's talk about use cases. Exodus is a crypto wallet. They had a ton of users and proved again that if you're doing a crowdfund, you need to bring your own crowd for best results. They did a Reg A+, which gave them access to both US and international investors. And they could do accredited, non-accredited, USA or international. They were the first crowdfund to raise the full $75 million that's available as part of the Reg A+. And a few months later, they listed their token on T0, and it's trading on T0. You can see the price on stomarket.com. Here's another use case. This is RealT, based out of Florida. They've created a portal for real estate, and they do these individual buildings. Each one is its own token that they tokenize shares of these Section 8 housing projects. They use Reg D in the USA, which is accredited investors in the USA, and Reg S International, which allows them access to both accredited and non-accredited investors internationally. So a little bit different than the Reg A+, and actually lower limits. They can't do 75 million. But what they're doing is they've created a portal and they just keep listing property after property after property. So you can go to RealT, you can subscribe, you can buy into these real estate properties, and you receive the token, and the token increases or decreases in value. And you also receive a cash stream from the rentals of the properties. And they're just doing that again and again and again. So the portal is the business. So to learn more about security tokens, watch the Security Token Show on YouTube. This is a sort of the next big thing in crypto. I'm super excited about it and look forward to your questions. Thanks, everyone. This is Mike Lingle at Rocket Pro Forma and Security Token Group.